Good morning, traders. It's 7:39 a.m. in Chicago, 8:39 Eastern in the Eastern U.S. on Monday, the 30th of October, 2017. Thanks for joining me for another Trader Bite. It is the beginning of the week. Happy Monday to all. Early nourishment for your trading mind on the first day of the week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As it stands right now, it's still early. We're about 15 minutes away, 50 minutes away from the open of the markets. As it stands right now, money's moving into the Treasury bond, and the euro looks to me like across the board we're moving into safety. No surprise after the big rally on Friday to all new all-time highs. The laggard this morning is the Russell 2000 down 0.37% or 5.6 points. And followed by the U.S. dollar, the Dow Jones, the S&P is down 5.25, down 0.2%, and gold is unchanged. The Nasdaq is up a point and a half, which is 0.03%, 0.02%. So that's where we stand. It looks like overall, we're in a mixed market to slightly risk averse, moving money into the sidelines. That's how things are shaping up. Looking at the calendar for the week, big week this week. This morning, we already got German retail sales and CPI, Eurozone consumer confidence, UKM4. We got the US PCE core and personal income, and then we're going to get, let's see, did they speak already? Looks like ECB Speaker Costa has already spoken, and in Portugal. And then at 10:30 Eastern, we get ECB Speaker Hansen. The rest of the week for tomorrow, we get CPI, GDP in the Eurozone. Tomorrow, we'll also get US S&P Case-Shiller, PMI, consumer confidence, and ECB's Visco. Wednesday's the big day. Wednesday, we get the FOMC rate decision, manufacturing PMI, ADP, construction spending, and in the UK, nationwide housing and PMI. That's the big day, Wednesday. We're going to see a build-up into Wednesday's release. Remember, there have been some surprises in what's going on with the Fed president nominations. Thursday, the UK gets its Bank of England rates, which is going to be very important for those who are trading currencies and so on. The UK announcement is likely to surprise given the inflation outcome from last week or a couple weeks ago. We also get initial jobless claims. Germany and the Eurozone give us manufacturing PMI, and Fed's Powell and Bostic. And then Friday is another huge day, non-farm payrolls and unemployment on Friday. So we have two huge numbers, or the two biggest numbers in the U.S. Economy in the same week. Fed's Kashkari and ECB's Kerr on Friday. Busy week economic release-wise. I did not go over what was expected of... I'm not going to spend the time on that because I have to upload this video really quick. But let's take a look at what's already happened. So here's the ES. The ES opened as expected in a gap up. We got our gap up. And from the prior day, you can see there's, we talked about on Friday, we talked about a lot of support, a lot of potential support down to 25.62.75, right in here, 62.63. The expectation is for a pullback and then impulse up and then consolidation, push up and then consolidating into the close, potentially turning down into the close. It did not turn down at all. What we got on Friday was basically a cross between a normal variation and a trend day. We did not break the 2 times the IB. We didn't exceed the 81.75, but the market did push to new all-time highs, and it tested this Measured move. Again, we hit the measured move within 2 ticks, like we did last time. No magic there, of course. That's just a projection of prior rotations projected upwards, and that's how I get those measured moves. The next measured move up is a double, so 2 different rotations having coinciding levels at that 2587. It's the next big area above, and that's how things are shaping up. And now we're trading down at 2572.50. 2572.50. So what did we do in the bigger picture? The bigger picture, we basically tested, we gapped up. That started our new area. We have a double distribution day right there. The next day we build on that double distribution, then we push down on Wednesday to 41.50. Big day. And then we come right back up. We push through the mid, so we practically cancel out the move down. We have generated an excess low. We consolidate the next day. Here's our energy being built, and then we use that energy to push back up to new all-time highs. Okay, and so there's a lot there that the market's working off of. Amazon was really huge on Friday. If you look at my FANG index, Friday, you see that Amazon after the open finished up 4.16%. 4.16%. That's just after the open. It was doing really well before we even started. So really really strong day pushed by techs, and that's why we still have the NASI teetering at zero, while everything else is lower. That's how Friday played out. Looking at the overnight, excuse me. Looking at the overnight, the market finished in the top. The market finished in the top quartile outside of the IB. Very strong. The expectation is we would see a drift up into the overnight session on Sunday. Did not do that. We gapped down on Sunday. We opened down here at 2575.50, pushed into the prior day's close to the tick, and then we found a seller early on, pull back to about mid, and then we've been holding near lows throughout the session. The volume on the overnight session is okay, 138,000. That's still higher than the most common volume in the overnight session, but overall, the market looks like it is having a hard time holding on to those higher prices. So that's how things are shaping up. Now, let's look at the bigger picture. So we see weakness in the overnight session, but we're still holding the exact mid of Friday. Here's that blue line. That's the mid of Friday. We're still holding that area as the low of the session. And then when we look at what we've done for the week, here's what's happened for the week. So let's split these, okay? So here we see the week before last week, Monday, Tuesday, consolidation, gap up, test down, push higher, new all-time highs. The next day, gap down, come right back into balance, That's a Thursday, and then Friday, gap up and run. And then last week, so just so you follow the story, last week, open higher, responsive, close the gap. You see this gap being closed right here, and then consolidate. We push right down. So we built a new composite starting this Friday right here, and then we see the market push all the way down through the prior week's range, and then test and essentially probe beneath that low. The probe is successful in that it brought on buyers. So we have what looks like an excess low here that pushed us right back through the mid of the day, and back into about the mid of this entire swing. The next day we consolidate. We see here we have a one time framing down intraday, and then the next day with the strong news we take off and then we finish near highs. So this last week engulfed the prior week, finished near highs, showing a lot of strength, showing the market's power to the shorts. Again, we always talk about how when the market sells off, do not sit there and pound on the short side. Yes, it's satisfactory because you get um, a quick payout on the short side, but this is not a market to trifle with on the short side. It's been like this for almost 2 years, and I just don't see it changing. So it's really important to take your profits or take something off or lock in profits. Hold on to that short future if you like, but lock in those profits with an option, so that once the market turns around, your stop is established through the option. And you just hold it to expiration or something. You know, it's not the best use of money, but it's better than being short and selling and selling and selling because you're predicting that it is the it is the top, which I see a lot of people doing. So that's what we've done for the week. We continue to show. We're not we're not one time framing up. We were until last week. We broke that, and we expected at least a push down to 25.3850 and lower, and we didn't get that. We instead got a push higher. So that brings us to today. Let's clean this up. At least we're getting some range. Friday we traded 63 quarter to 80.75. That's about 17 and a half points of range. That's pretty good. Good volume on Friday. If you look down here, the black is the 20-day average at that time in 15-minute time slots. And you can see that the actual, which is these bars, the actual is higher throughout the session. There's only one bar that was lower. Uh, we just had some pretty good activity on Friday. It's not my kind of market still. Unfortunately, it's been a while, but it is fairly strong. This morning, I'm looking for the primary scenario on our trade plan. Looking for, again, we're opening inside of the prior day's range. I'm looking for an open auction. I'm looking for a push through the overnight low early. I'm looking for a response, so an impulse up, consolidate against mid or the opening swing and start to drift up and back into the range. I'm looking for this to build balance back up here. Okay, I'm looking for a profile that looks something like a P again. Okay, so this is scenario one, is responsive up, responsive buying into the prior day's range, and for the market to hold the prior point of control. The secondary hypothesis is not the opposite. The secondary hypothesis is the same. Push through the overnight low, push up, grind up, test, and then come back down and fall back into the opening swing into the close, so that we test the point of control from below, but we are unsuccessful in holding it. And what we start to do is we start to build down here, right? We start to build value below. This is what we've done in the past with our new all-time highs. We start to build below, and then we start to shift down, look for those buyers at lower prices. The big targets below are this 25.61 currently, and that's what I'm looking for on scenario number 2. Scenario number 3, open, test higher, impulse down, pull back to the opening swing, and then continue lower and push back, come into balance at 25.68. 25.68 is a huge magnet right now Do not be surprised if we see scenario number 3 as the one that plays out. Okay? Good luck today. I have to cut it off here. I have to upload the video. Good luck today. I want to remind you again that on Thursday and Friday, I will not be doing a Trader Bite. I'll be in Vegas at the Traders Expo. I was invited to speak, and I'll be attending that. So if you're there, I'll catch you there. If not, then I'll catch you the following Monday. So I'll be here Monday, today, Tuesday, Wednesday, and then we'll resume back in business on the following Monday. Good luck.